Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Aydin Mirzaee of Fellow coming to us from Ottawa, Canada. How's your day going?
Very good. How are you?
Very good. Just walked my kids to school. It's a beautiful day here. Life is good. How's Ottawa? Are we into fall yet, or is it still summer in Ottawa?
We don't really have fall. We basically have summer, which is about 2 months. We have some good years where it might be 3, but usually 2, and then there's a lot of winter. So if you live here, you have to be into skiing or snowboarding or skating or some sort of winter sport. Otherwise, winters are long. But the really nice thing is, if you come from startup land, the worse the weather is outside, the more likely you are to stay inside and get a lot of work done. So there are benefits.
Definitely, for sure. Well, great. Well, let's talk about what you guys do. So what is Fellow?
Yeah, so Fellow.app is basically a software tool that we produce that, it's something that I really wanted for the longest of times as a manager of teams. And so what it is it's just a manager's co-pilot. So it's a tool built for managers and their teams to help them power their one-on-ones, their team meetings, feedback exchanges, priorities, goals, all the different things that managers do with their teams. What Fellow does is it just very neatly, tightly couples all those things in a very beautifully simple to use interface, very much like Slack or Asana or Trello, but really just meant for managers and their teams from this productivity angle.
And so a manager would sign on to this, get his or her employees on, and then just start running one-on-ones through this, and it's logging everything. So recording, performance data, stuff like that. Is it kind of a performance tracker too?
We don't think about ourselves as a performance tool. We more think of us as a productivity tool for managers and their teams. So it's everything. So it's a lot of what you said, but there's also a lot of really cool things like smart suggestions of what to talk about, when to talk about them, keeping track of action items, seeing the history of all those conversations. But also, it's kind of like this collaborative agenda that you have with each and every person on your team, but also for your staff meetings, your team meetings, way to exchange feedback. It helps you manage all of your relationships at work.
That makes sense. And I guess, what are people doing now? Like, what are you replacing? Is it a lot of ad hoc tools or what?
Yeah, so people do different things. Pen and paper is still our number one competitor for a lot of the stuff that we do. But, Google Docs, spreadsheets, some people might use an Asana. There's different ways of making great workflows happen. But what Fellow does is it's a special purpose tool. And what we like to say is it just reinforces really good habits and makes it easy for everyone in the company to employ them.
Cool. Great. And what's the backstory? What were you doing before, or where did this idea come from?
Yeah, no, it's a super great question. So my background is, before this, I started this company called Fluidware, and it was 2008, it's the depths of the financial crisis. We kind of looked around and tried to figure out if we should raise money or not. The world was falling apart, so we decided we shouldn't even try, because if we did, we'd fail. So we actually bootstrapped that company, and it grew from like 0 to just about 100 people. And then we sold the company to SurveyMonkey. And then we kind of grew with SurveyMonkey, and SurveyMonkey recently IPO'd and all that fun stuff. But being a bootstrap company in Ottawa, Canada in 2008, one of the things that we would do is the way that we would learn things, and I was 21 when I started that company, so didn't know anything about anything. And so the way that I would learn is by using different software tools. So if you use Salesforce, you'll learn some things about sales. And if you use Marketo, you'll learn some things about that. And we started hiring people. All of a sudden, we became managers. And then eventually we became managers of managers. And so we were wondering if we were doing it right. But then we had people under us, and we were wondering if they were doing it right. And we're like, where's that equivalent tool? Like in the same way that account managers have Salesforce, where's that equivalent tool for managers of people? We looked for it, we didn't find it, and so we decided to build Fellow.
It's, not to connect everything back to us, but like it's kind of a similar, I was hearing some like resonances of like what we're trying to do at Founder Suite, which is build this set of tools for doing fundraising like the right way. And for people, 99.9% of people who raise capital have never done it before. So they need some structure and process and best practices. So I'm a fan of like products and tools that sort of put that into SaaS, right? I think that's a cool,
Yeah, it's super analogous. I think like Fellow does for managers what you do for founders. That's a really good way to put it.
All right, so that's great. So let's talk about raising money. How much have you guys raised and how many rounds?
Yeah, so we have raised a $6.5 million US seed round.
And who led it? And was there an angel round, or was that your first chunk of money in?
So it was led by Inovia Capital, which is a venture firm which is based in, has locations in a bunch of different countries, but they also are headquartered in Canada. So they led it with participation also from Felicis, that's based in the Bay Area.
Okay, great. Yeah, I've heard of Inovia. They're pretty active Canadian investor. Are they maybe one of the most active, or?
Yeah, they're definitely one of the most active. I mean, it's hard to say who's the best firm, but they're definitely, one of my favorite firms in the country.
And are you guys live in the market now, or it felt like it was maybe still in beta, or no?
Yeah, we still are in beta.
Mm-hmm.
And we are going live so by the time that this gets published, I think we will be live.
Cool. Great. So talk about raising money for, an app that was not in the market yet. That sounds like it might be challenging. Was it difficult? How did you put it together?
Yeah. So, I mean, there's a couple of things. And I think what's interesting is, for me coming from being a bootstrap founder before, one of the things that was interesting is just like the sharp contrast. So even though we've raised venture capital, I feel like a lot of the original ways that we started this company was very bootstrap-like. So my co-founders and I, it was me and my other two co-founders, Amin and Sam. So we each put in a bit of money into the company and obviously a lot of sweat equity. So we had actually been working on the product for just over a year, maybe, before we even started the fundraising process. So we already had an initial prototype. We already had an initial customer, or a few customers that were using the product and paying for it. So we already we're pretty far along, relatively speaking. So it wasn't really like a PowerPoint and give us a check. Yeah. So it, but at the same time, it still wasn't readily available. There was still a lot of things to do. But we did definitely have a lot to show. That it is a very big seed round to raise without having those sorts of things.
And how did you identify that cast of characters? I think I also saw Garage. Is that Garage Ventures?
Garage is there too, yes.
So that's a blast from the past. I remember Garage, wasn't it Guy Kawasaki? And
yeah, I know who you're talking about. So this is a different Garage.
Okay.
Yeah, this is a different Garage in Canada. I really like those guys as well. Yeah, so how do we identify them? So this is a really good question. Like it's really hard to say, in the beginning you asked about how active these investors are, and so on and so forth. I think what's interesting about our story is obviously we're a startup located outside of the Valley.
Mm-hmm.
And so the thing is that there's a lot of things that I like about Inovia very much. One of the things was that when we had sold our last company, they had, and this was in 2014, so they had reached out to us. So specifically the partner, Karam, who I think is, honestly, is such a pleasure to work with. And this is one of the reasons that I love Inovia so much is, so they had reached out and they were inviting me to all their different meetings, all their CEO summits and so on and so forth. So I had a relationship with Karam for close to 4+ years. even before we initiate, and really like a no obligation, like, hey, like he would connect me with folks, introduce me to his other companies, say like, can you advise these folks, and so on and so forth. So had so much interaction with him beforehand. And that's the thing that it's interesting. There's 2 tips in there, actually. The first of which is that I think it's not the firm that matters. Like, I think what really matters is who the partner is. And I think the test to figure out if that is the right partner is, are you excited when your phone rings and you see that person's name on the caller ID?
Sure.
If the answer is yes, then that's great. But if you get nervous because that person's calling, that is not great. So I think this is one of the things that we like I looked out for, and I just had so much fun with like always talking and working with Karam that it was just like, oh, this is another excuse for me to talk to you all the time. I like this idea. So that was one of them. But the other tip that I wanted to say is that it wasn't just them. So I was basically, even once we sold our company, I knew that at some point in time there would be another one. And so I started going to all of these different events. I messaged a whole bunch of venture firms and partners and said, hey, like, this is me, this is my profile. I'd love to talk to your companies or if there's events and so on and so forth. So I started like really building up my network. And the reason I had to do that was, again, the last company was bootstrap. We just weren't in that space. We were located in Ottawa. And so I had to build up that network from scratch, just knowing in advance that someday that this is going to be useful. So I met all of the different venture firms in obviously in Canada, but also a bunch in the US, and really started building up that network. And so my advice basically is for all of the, some people might say, okay, well, you're a previous founder, but I don't think that that's the point. I think the point is that, hey, if you're a product manager at some respectable company, say you're at Box, you work at Box as a product manager, and like one day you may start a company. Great. Well, you should start from now to start to go to these VC sponsored events, build up that network, and offer to advise companies in those portfolios, and start to do that and really get to know the partners. Because it's the partner that's the only way you're gonna learn if you really like to hang out with those partners over the long term.
Yeah, no, that's interesting advice. I was going to ask, like, why did these guys want to talk to you? Was it because of the previous exit, or because I think that is something people just coming to the startup scene might wonder, like, why would any investor want to talk to me? But yeah, I don't know. Do you need to bring something to the table, like you're saying, like maybe offer to advise their portfolio companies, or what do you think?
Yeah, so I think part of it is that bringing something to the table is always good, but I think people underestimate like what they have to bring to the table. You have a lot of expertise in your domain knowledge, you have contacts, and but the other thing is that just connecting with people without necessarily having, an ROI to get out of it right then and there is always a really good approach. So I would just like be at those events, like be present, be seen, talk to those folks, and build up those connections in advance. It means it's very much like, especially coming outside of the Bay Area where there isn't such a large concentration of venture capitalists, I think it's super important to build a relationship over the long term, and it'll make it so much easier when you actually have a reason to reach out for raising capital.
Cool. Good. Well, what are some other tips and tactics you put into place as a Ottawa startup founder raising money? Yeah,
so I mean, a few other things. So I think one of the things that I thought was really important, and one of the privileges that I've had is that I've also been an angel investor, and so one of the nice things about that is you get to see your peer founders, and you get to see what they do well and what they don't do well, and which ones you really want to invest in and which ones you don't. And so when you see enough of that, you can basically identify and say, oh, I should do that and I should not do that. So one of the things, which is a common one, and I'm sure you've heard of it before, is this concept of a big market. So the big market concept is that, again, if you're playing the venture capital game, you have to understand that it's all about the possibility of a really, really outsized outcome. So like VCs are looking for, can I invest in this company? Does it have a possibility of returning my entire fund?
Mm-hmm.
Which means that like you might have to return $1 billion to that fund. And so if you're going to return $1 billion and the VC is only going to own a portion of your company, this better be a really large market to go after. So if the market is not in the several $billion and above level, and again, VCs will defer, but generally speaking, the VC game is this has to be a really big market. So, in angel investing, I've had so many times where people have come in and said, oh, this is like a $300 million market. And I'm like, wow, it's a $300 million market. It's just not big enough. So many things can go wrong. And like, how can you expand that vision? And you don't have to go after like the $10 billion today, but you can show that the tangential spaces can lead up to being this really large market.
Mm-hmm.
And I think there's this famous story of what the Airbnb founder did. And when he was looking at his market, and I think whoever was advising him said, no, change that like the 300 million to 30 billion or something like that. And then just continue with the rest of the presentation. So this stuff really does matter. So that's one. Another one that is super interesting is this concept of design. So I had my original pitch deck, and I had a friend who had done really, really well in raising a lot of money. And one of the things that he told me was, once you're all done, obviously the content matters the most. But once you're all done, make sure to have a professional graphic designer go through and make this thing look amazing. And I said, but yeah, like, I'm going to have to spend a few $1,000s, to do that. And, is it worth it? And he said, that few $1,000s is going to increase your valuation by a few $1 million. So yes. So I thought it was incredible advice. And so I did it. And ever since then, whenever I'm meeting with founders to invest or whatever else, I always advise them to do the same thing. I think it's a really important thing that makes you stand out by having flawless design in what you do. And the reality is, we're in this world where the bar is so much higher. Apple has, and other companies like that, have raised the bar so much on the design front. It's just that people expect to see that level of aesthetic pleasantness in your products.
Aren't you changing your deck a lot though when you actually get out fundraising, like revising it kind of constantly? Do you keep going back to that designer to update stuff, or are you able to, you know what I'm saying?
Yeah. So obviously some of this stuff will depend on like where you are in the process. But generally speaking, if the slides are done well and you have some sort of like editing skills, you can kind of take things and move things around and so on and so forth. But as long as like the base framework for the slides are the same, and some of the charts, like how big is the market slide, and so on and so forth.
Got it. Yeah, that makes sense.
Hopefully you're not doing that after your first draft. Like you're, revising it quite a bit, and then when you're ready to officially do this, get a designer to go through it.
Did you have a designer in-house, or did you go to like an Upwork or one of these, Fiverr, and do a kind of budget designer?
Yeah. No, we actually did hire a freelance designer. Yeah.
Okay.
Yeah. So it doesn't have to be super expensive. Yeah.
No, I like that. It is important. I think one of the things I say a lot to founders is obviously make sure your pitch overall is amazing, because you don't get a second chance to make a first impression, right? Kind of the old cliche. So looking good is important.
My view on this stuff is that, generally speaking, business is a game of probabilities. The only thing that you can do is try and increase your odds at every step. And if there's something that you can do that is minimal effort that increases the odds, then it's incumbent, like you should do it.
Yeah.
It's almost your responsibility to do it.
Cool. Great. Any other little nuggets of advice that you'd like to share?
Yeah, I can keep going like this, and
please keep going.
Stop me if I
roll.
Too much.
Let it roll.
Yeah. So another thing that for me was very important is this concept of building up credibility. So a lot of times you'll have you always have this about page, right? Of like, who's the team, and why is this team the right team? And I think like everybody, if they dig a lot of people are not very good about talking about themselves or like finding things that are special and unique. And it is hard for people to do this, but I think it's important for like you and your co-founding team, for every person on the team, to figure out that one little thing that makes them special or stand out or something interesting that they've done or so on and so forth. And I think it's important to showcase those things on that basically team page. So someone like, basically, what school they went to, or maybe they, started a business when they were 12, or, whatever it is, like everybody has unique things. And if you dig far back enough, it just humanizes the pitch and gets people to identify with you at another level.
Yeah.
But also these pitches get sent around. So if you don't kind of like call some of these things out in a sea of many pitches, it's important to kind of like on the founding team perspective, identify a bunch of those things. And it could be hobbies. Like you could say that, like I like to, or I'm a competitive, Wii player or something like that. It could be anything really, just to humanize and also bring up some interesting elements about yourself.
I like that a lot. There's a, I think it's a Y Combinator interview question. It's like, tell us a time where you hacked a system, or there's some question like that where it's basically tell us a time where you've been exceptional, and I think that's
100%. Everybody has a time that they've been exceptional. There's no question. They just have to look and basically write it out.
Cool. What else?
Yeah. So the other thing is this concept of valuation. I think like people are, it's very easy to get fixated on valuation. What's important to note is that, Uber's first valuation on the first round was something like a $4 million pre, right? Mm-hmm. And that's for a company that was worth north of $50 billion, trading today in the market. So like this stuff doesn't really matter. What matters more than the valuation is the number of rounds that you do. So it's way better for you to do a less number of rounds than to just shoot for some super high valuation that may come and bite you later on. The other thing that's actually more important than valuation is the terms that go into the deal. So what's interesting is I took an interesting approach when it came to negotiating the terms. And that was like when I first started, I was, I was working with my legal team and saying that, okay, well, what's common on this one? Like they want this, and like what's common, and what should I do, and so on and so forth. And like they would give me, like most people do this, or most people do that. And at first my approach was like, let me just go with, I guess, what most people do. And then I took a different approach. And so I called a friend who had raised a lot of money and had raised from, much larger funds like SoftBank and so on and so forth. And I kind of went through and I'm like, hey, what should I do with all these terms? He's like, no, are you kidding? Negotiate on like every single one. Here's what you could do on this and what you could do on that. And it was just like at that time, it completely changed my perspective on what was possible. And so rather than going for the middle, I decided to just shoot for the best on each and every single term. And like, frankly, that stuff matters so much more than some basic valuation number. I'd rather have a lower valuation any day, but get the best terms.
And we could talk, I mean, this would be a whole podcast on stuff, but any one or two terms in particular that you really paid attention to and negotiated hard on that you recall?
I mean, there's a bunch of ones, but one of the ones that's like a super obvious one to talk about is just this concept of board seats. Like how many board seats we have, and if you're doing say a Series A, like they might want two, and like the venture investors might want two, and it might be in your best interest for them to have one. And some people like that may be like something, and they'll say, oh, this is standard, and we do this all the time. But the thing to note in this world is that there's no, I mean, there might be like most people do this, but there's no, right way to do it. So I think you can negotiate on all those fronts. And sometimes it's so in the future that you might not care about it. And you might say, oh, well, that will only mean that I lose control in series whatever, like D. Yeah. But if it becomes harder to negotiate terms later on. And so if you have the opportunity, I would say negotiate them earlier. And the best place to go is to talk to someone who has raised many rounds in like those later stage rounds and say like, what is like the best outcome for this particular term? Like, where could this land? And then start from there versus start from the middle. Like that. That's kind of
great. Sure. Very good. Good. What else? Anything else?
Yeah. So one of the things was that I've had friends that have basically pitched to 100 VCs and then finally got a yes from one of them. And but the reality is, so when we did it, we didn't necessarily, so all that to say is sometimes it takes that much. And so be ready for that. And depending on what you're doing, be ready for that. But one of the things that I did was, I identified some of the VCs that I really wanted. So for example, Inovia and Karam from Inovia, and also like Felicis were, obviously two that I really wanted. But before that, I started my pitch fest with a bunch of VCs that weren't necessarily my top pick. And so the idea with them was just to, like, I didn't really even care if they said yes or no. And a bunch of them did say no. But basically, like, I just wanted to see, like, what they would say. And I'd say, oh, cool, like, what are they objecting about? And that offered me the opportunity to revise those things and to iterate. But the important thing was, don't start with, like, if your favorite firm is going to be, I don't know, Sequoia, don't start with Sequoia. Like, start with someone else, and start with Angel, start with whomever, and let them say no. And rather than getting disappointed when they say no, get excited because they just told you one avenue that doesn't work or one iteration that doesn't. In the same sentence, I want to say that it's also important that some people will just not, like, they're not the right person for your idea. In the sense that, like, they just have different interests or their firm invests in different sorts of things. So for some people, I would see, like, the light in their eyes when I would show them our product. And they'd say, like, oh, wow, this is so cool. This is, like, I would have used this. I remember I was a manager and I would have used this. And, like, they really identify and they get excited about that product. That's really good. And then some other people I would show them and they're like, yeah, like, so I guess managers need this sort of thing. Like, what are they used? And they would ask all these, like, logical questions. Yeah. Which is fine, but it's like the ones that kind of you can see from the very get-go, and you want people to be very passionate about, like, the product you're building and the company and so on and so forth. And again, like, to some extent, it's getting a round done is always very good. But in the world of you have the opportunity to choose, it's much better to see the people who are just, like, excited about the product that you're building. And so one of the things that I found out very early was, like, I'd look for that. And if they weren't super excited about the product that they were building, that we were building, then I wouldn't even go to, like, meeting number 2. I'd be like, moving right along. The telltale sign for me was both for Inovia and for Felicis, they were like, can we use this internally? And they just wanted to do that. And so, a bunch of other firms didn't. And so I was like, okay, well, that's cool. And even if you may want to talk to me, I'm now less excited about talking to you. Do you have any standard, like, way to tell them no in a nice, soft way that doesn't burn a bridge to just, like, not a good fit here? Yeah. So the thing is, like, I believe in relationships in a very long-term format. I know that, like, if everything works out, I work on Fellow for the rest of my life and build a really big company. But you never know. And so you never know when you might want to raise from that VC ever again. So burning bridges is really bad. Never do that. But I would just, like, if they want to have a second meeting and you decide not to, I would just do the delay tactic and just say that, I'm kind of, busy. We're working on a few milestones. Let me get back to you and do something like that. I mean, there might be better ways. I might not be the best at, that particular answer. That's good. The other thing is, like, pitching to founders is always a really good idea because they've pitched to a bunch of other folks and, like, they can kind of identify things and lessons that they've learned. So I would pitch to your peers. That's always a good idea. I wanted to also throw in a few resources that I think are useful. Yeah. One is my favorite book on pitching is Pitch Anything by Oren Klaff. I don't know if that's been recommended on the show before. But Pitch Anything is incredible. So it's actually about like and he brings up so many of like the great concepts around pitching. Like one of the things that he says is like, look, you are the prize, right? Everybody's money is green, but there's only one company in the world that is unique the way you are, and you have to treat you and your company in that way. You are the prize, you are the unique part, and you have to walk into meetings like with that attitude. Obviously, you don't want to be cocky and so on and so forth, but recognize that what you have in your team and what you've built is super valuable and unique, and it should be cherished. So the other thing I want to say is, I'm sure it's been thrown on here, is just venture hacks is when especially when it starts to come down to the basically the terms and things like that. That's another good one. And there's a bunch of really cool books. Angel by Jason Calacanis is a book written for angel investors. But even if you're a founder, I strongly recommend that you read it. You will learn a lot. Scott Kapoor from Andreessen Horowitz just wrote another book, which I forget the title of right now, but I just recently finished it, and I think it's awesome. So I would read all of this stuff, and even if you're going to be raising money in a year or two, start reading that stuff now. It'll change the way that you think, but more importantly, it'll get you to understand how those investors think. The other thing I wanted to throw in was this concept of story is everything. The most important.
I went to his book launch and I couldn't remember either. It's Secrets of Sand Hill Road.
Yes.
Secrets of Sand Hill Road. There you go, from Scott Kapoor.
Excellent book. So the other thing is story is everything. Like story trumps all. It is the most important. Like you could. If you have the best, so now it depends. One of the things that we found is that, if you're dealing with investors, and I'm generalizing big time here, this is absolutely not a rule, but generally speaking, later stage firms, and sometimes a lot of firms in like the East Coast will be much more about numbers and multiples and so on and so forth. And I feel that, you go more West Coast and it starts to be more about story. And like, I started out by talking about my story about how I worked at this startup, it grew and we became managers and the managers of managers, and I wanted this thing. And it was really important for people to understand why. Why is this important? Like, why is what you're doing important? But two, why is this important right now? And three, why you? So these three whys are like really, really important and have to come across in the whole story that you're telling. People from ancient times have been telling stories. Humans are storytellers. If you've read Sapiens and so on and so forth, like we humans are about stories, and they're the most captivating way for you to actually engage an audience. And so your storytelling skills are something that you should really try and master in the process, because you're telling them the story of your business. So the other thing, I'm just looking at the board on other things that I've kind of written down for myself. What I would say is like, treat every pitch as a very valuable opportunity to build a relationship. Because what you don't know is that person that is going to go later on, and they might be, some people are like, don't talk to associates or don't talk to analysts. And, frankly, what I've found is that many associates and analysts are some of the smartest people that I've ever met. And they'll offer some like super cool feedback or ask some really interesting question that you had never thought about, that you would have had a blind spot if you hadn't interacted with them. So take every one of those as like an opportunity to learn, but also like, you never know that, later on they'll go and they'll say, hey, they're meeting with a portfolio company that says, hey, we're looking for a tool for manager enablement. Like we have this problem where we keep promoting these junior managers and like, they're not trained. Like, what do we do? And they'll say, oh yeah, I met with this really interesting company that they're building a tool for managers. It's called Fellow.app. Go check it out. And so all these things, don't look at it as like a binary, they invested or not. The opportunity is like, this is an opportunity to build a relationship, learn something. And, who knows, 6 months, a year, 2 years down the road, some really interesting thing may come of it.
Yeah, totally. Yeah. That's great.
Or you may be able to build a connection with one of your peer founders with that person. So all these are like potential opportunities. The other thing is like, you have to be in the mode of like, either you're raising or you're not. So many times I've had, friends and peer companies come in, they're like, yeah, like, we're raising this. I'm like, weren't you raising that like 3 months ago? Like, are you raising or are you not? Like, what's going on? So I think the problem is that my preferred approach to this is like, when I go and meet a lot of times with VCs, I'll say, look, we're not raising. Like, we're really not. We're just, we will be in 6 months to a year, but I just wanted to get the opportunity to know you folks, tell you a bit about ourselves. And like, if it makes sense, like, we'll keep talking, and I'm happy to send you some updates. But when you're ready to raise, like, it's about setting a deadline. So it's, hey, so now you have all these relationships that you've built. So now it's about, okay, let me email everybody and say, hey folks, I know we've been chatting for a long time. You've been getting my monthly updates, which, by the way, is a really good idea. It shows that you have a lot of rigor and very serious about what you're doing. I'm ready to raise now. And our target close date is September 20th. So let's get going. I've started the process, and I'm expecting to receive term sheets like on this week, and so on and so forth. And you kind of set those things. And so that kind of like that sort of playbook makes people more serious. They understand that this is what they're doing. This is their targets. Other folks are involved. And so it just makes the process happen. If it's like we're doing it, but there's no specific deadline, it'll never get done. Like as with any other project.
Yeah. Really good.
The other thing is you want to get those term sheets at the same time. The worst thing in the world is like you get a term sheet, but you kind of want you kind of have a favorite firm and they haven't, gotten one. And now you're in this situation that like, I have to tell these guys something, but I haven't gotten the other one and they might not give me another one. So now I'm screwed. I don't want to burn this bridge. And like, what do I do? This is why this timeline is super duper important to get everybody the term sheets to come very close to each other. And if you get them at the same time, there you can compare. And if there's a term that your favorite firm might not have that particular term, but you can say that, look, I really want to go with you guys. Like this one thing these folks have, and it's important to my team and I. Like, is there any way that we can make it work? And the thing is, like, here's the important thing about negotiation on these terms in general. I think sometimes you can get stuck in between lawyers, and a lawyer may come in and say, like, no, it has to be this. And your lawyer will say, no, it's got to be this. But the reality is, like, the approach that we took was to really talk with the partner. And again, like, if you have a relationship, so when I was talking with Karam from Inovia or with Aydin from Felicis, it was very much hey, we have this great relationship. Like, this is a thing we've got to do. I'm curious, your lawyer is talking about this. Could you explain to me from your perspective why this is important? Like, what is like the main thing that you're looking to protect against here? And then he'll tell you, and you'll get a different understanding rather than making assumptions. Like, really hear out like what it is specifically that, like they've been burned in the past or like something's gone wrong. And like, when you really deeply understand the why of a term and like their perspective, it gives you a whole different negotiating playbook. Because now you'll say, oh, that's interesting. Like, I actually don't even care about that. I'm happy to give you that. But like, the way I read this is this other thing that I care about seems to be, okay, cool. Let's like break up that term into 2 terms. And like, we both get what we want. And like, literally, like, that's the sort of stuff that, again, when you get stuck in between 2 lawyers doing all the talking, that like really deep understanding tends to get lost. So that's another thing that I would recommend. I mean, there's a bunch of things, and I'm sure, but I could keep going for a long time, but.
I'm on number 14. I've been taking notes. I'm on 14 so far, but this is good.
Yeah, but it's an exciting process. I mean, it's an opportunity to go out and tell your story. And look, pitching never stops. I'm pitching every single day. I'm pitching to new employees. I'm pitching to customers. Like, the better you get at pitching, it's something that's going to pay dividends for life. So I would cherish the experience.
One of the questions I got yesterday, which I thought was kind of interesting, is like this concept that you were talking about of, should you always be fundraising or should you turn on your fundraising, get it done, and turn it off. And I like your concept of like putting this timeline together, but you're also talking about always like pitching. So I guess you're sort of building those relationships always, constantly, but bracketing your fundraising.
Yeah, I mean that's the approach I like to take. I like to always be building relationships. These are very smart people, very well connected, and it's worthwhile to build those relationships. And it's also nice to treat it as a project. Now, with that said, you should always be opportunistic. Like, don't be so stuck to some rigid structure that doesn't allow you to navigate within. If there's a crazy opportunity that comes along and so on and so forth, I mean, you should evaluate opportunities as they come.
Yeah, good. All right, Aydin, this is just chock full of good nuggets and tactical advice. I love it. If people want to learn more, it's Fellow.app. And can they sign up to be on the beta waiting list, or what can people do?
Yeah, if they sign up on the beta waiting list and then say basically that they heard about it on this podcast or they mentioned Founder Suite, we're happy to bump them up the line and get them in much more quickly. And depending on when this gets published, it may actually may be publicly available. So they may not even need a wait list. Okay,
cool. Awesome. Well, this is great. Thank you so much for your time. Good stuff. It sounds like a great product. I'd love to check it out. And we will look for you after your next round, my friend.
Okay. We'll be in touch.
Okay. Thank you, sir.
Talk to you later. Bye now.